just started realizing that money could be an incredible tool to help people live a more impactful life. And while I couldn't articulate it at the time, I couldn't understand why everyone was broke. Cash flow is everything. Cash flow will really run a lot of areas. Look at your cash flow and ask the question, is it possible that we could increase that? Because that is the number one thing that will drive the bottom line, is if you can maintain your standard of living and increase the money coming in and save that.
You're listening to the Millionaires Unveiled podcast, where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their current portfolio allocation. Now to your hosts, Clark Sheffield and Jace Mattinson.
Welcome back to another episode of the Millionaires Unveiled podcast. This is episode number 173. Clark, how's it going? What's going on in your world, man?
Doing good. Just watching this crypto go up.
Yeah, right. Man, you got any crypto?
That, nothing much.
You got any crypto yourself?
No.
What? Yeah, I got a little bit, but no crazy exposure to it. But it's one of those things that, we saw Elon Musk announce this week that Tesla bought some. So if you're holding the S&P, you technically have some exposure to it now, since it's on Tesla's balance sheet at this point. So
yeah, what did he buy? Like over $1 billion or something crazy?
Yeah, I think like 1.5 billion or something. So pretty substantial amount, right?
Just a little chump change.
Yeah. Said that they'll probably allow payment via crypto in the future, or at least Bitcoin. It's pretty interesting. I fiddled around with Dogecoin back in the day. It's up substantially for me, because I think when I bought it was like 3 cents, and now it's like 6 or 7. So
do you have Bitcoin?
I've got a little bit of Bitcoin, but not a ton. And
are you going to buy more, do you think?
I don't know. I mean, it's one thing I'm trying to figure out, like, how does that fit in my portfolio, and does it? And if it does, then what kind of allocation? It's definitely not putting any of my retirement accounts. I think my retirement accounts, I kind of have those pegged in those funds and set it and forget it. But starting to build a little bit of a holdings outside into taxable account. That's kind of where I hold that crypto. But it's not a substantial portion for me of my net worth, and it's definitely not going to be anytime soon. It's just a matter of, do I make a strategy of it? Is it going to be adopted, in the future? Is this what we're headed towards, and does it make sense to invest in it or not? Or, it's one of those things that it's come out of left field. I think a lot of people thought it wasn't going to really get legs, and now when you got a Fortune 500 company buying it, it kind of makes you think a little bit. At least it made me think a little bit more than I had before. I mean, before I just kind of got some as not a joke, but just, all right, I got some Bitcoin, or yeah, I've got a little Dogecoin for kicks and giggles.
So what percentage we've interviewed 250 millionaires or so. What percentage of them do you think hold some sort of cryptocurrency? It's really not many. I mean, if it was 5%, that'd be 12 people. That probably sounds about right. Maybe
yeah, something like that. I mean, it's about the same equivalent of how many hold gold, precious metals.
Yeah, probably only had 10 or maybe even less, right? Less than 5%.
Yeah, it's not very much, but that will be something I think interesting for us to look at over the years, is to see what portfolios change and as it relates to crypto, and by how much. Because some of those people, I mean, if you would have just put in, a couple $100 in a crypto back in 2013 or 14 or 15, I mean, that would be several $100,000, if not $1 million now.
You almost did, didn't you?
Yeah, I was, it was one of those things I read about. My roommate and I in college were kind of dabbling and found this, and it's kind of like, man, let me see if I can figure out how to buy some of this stuff. Maybe it'll be something. And I think I was like, oh, yeah, I'll do $100. And he found some garbage backdoor website. And, at the time I didn't really understand it, but it seemed like, hey, maybe this will have legs someday. And if I lost $100, oh, well, it's not the end of the world. But we could just never really figure out how to reliably buy some. And so we just never did. I'm not smart enough to probably.
Easier. You can buy crypto through PayPal.
Yeah.
What else? There's other
Robinhood. I mean, there's all sorts of brokerages that. It's interesting because on one hand, you've got CEOs of major banks like Chase that are out there saying it's a complete scam. And then you've got, an Elon Musk, who's one of the wealthiest people in the world, putting it on the balance sheet of Tesla. There's two big viewpoints on it, whether or not it's going to have legs and whether it's not, it's for real or not, or I don't know. You going to buy anytime soon?
I don't think so, but it'll be fun to follow and fun to see how it all plays out.
Yeah.
How much higher is it than when it was, what was it at a couple years ago when it had reached its all-time high, and then it dipped, and now it's obviously back up, but how much higher is it now than then?
I mean, heck, Bitcoin, let's just see here. 2 years ago, which would have been January, February, so is at $3,000, $3,500, and now it's at $45,000, $46,000.
Yeah, so it looks like its last peak, though, was, I mean, when it first kind of got the hype was December 17, it got up to 20 grand. So it's doubled, basically, or a little bit more than double what it's at, 46 now as we record this.
Yeah. I mean, it dipped pretty low after that 17 for 2 years, and then kind of been hanging out. And then obviously, I mean, it's just skyrocketed in 2020. But yeah, I mean, I wasn't smart enough to try to figure out how to mine any myself either. So I just needed to figure out if I could buy some, and I never really did.
We wouldn't probably be doing this.
Yeah, that is probably, well, I don't know. I still love the podcast. It's been pretty fun. That's for sure. But anyway, on today's show, we have Caleb. He's an entrepreneur, has a net worth of about $8 million. He's about $700,000 of that liquid, but a majority of his net worth is invested in his business. He keeps about 1 year's worth of payroll in his savings account. He has about 13 employees. One thing of note is Caleb is young, a very young millionaire. He's 24 years old, and he's a big believer in businesses and does not invest in the stock market or real estate at this time. It's going to be a great interview with him. Last week we had Max. He shared a story about growing up very poor in India, moving to the States in high school and jumping around to different colleges. Following college, he worked at a hotel until the hotel suddenly closed and he was jobless and without savings. He lived on the streets for 6 months until he was able to find another opportunity and start fresh. He now has a net worth of $1 million, owns a gas station and a couple other rental properties. Thank you all for listening to the show week after week. If you enjoy it, please review us on iTunes or Stitcher. Helps us continue to grow the show and reach new millionaire interviewees. Also, if you're interested in any multifamily or commercial opportunities in real estate, let us know. Reach out, millionairesunveiled@gmail.com. We'll get on a phone call and kind of discuss our process with you and go from there. Really appreciate all the millionaires that continue to reach out. We're always looking for new ones to interview. We love getting all these stories out there and really helping the greater good and learning from each other. Without any further delay, let's get into the episode with Caleb. Caleb, do you want to just give us a little bit about your background and what you're up to now?
Oh, you guys, I'm a huge fan of yours. Thanks you so much for having me on the show. And my quick background is I'm a 24-year-old entrepreneur in the financial service space. I run a company called Better Wealth, and I'm extremely passionate about helping people maximize this whole money thing and truly live a more intentional life. And so that's what I do. And I've had quite the journey in the financial service business, making me a very young person. But I am grateful to be in the business and serving people.
No, that's exciting. And I can't wait to get into your story a little bit. We were talking a little bit before the podcast, but before we get into that, what's your net worth today?
Liquid, I have about $780,000 that if we had to liquidate just all my liquid assets, that would be. And then my business was valuated last year around 7.6 million. And so that's kind of, I like to separate those because I think some people can enhance their business net worth, but run a business. And I also have quite a bit of liquidity.
Oh, that's awesome. So let's break down the liquid assets or the assets that you could liquidate. How are those broken up?
Yeah. So because I have 13 people on payroll and we're growing, I have a good year's worth of payroll just sitting in a savings account. And part of those savings is in high yield savings where I'm getting a better than 0% interest rate. I also, and this is going to open up a whole can of worms, but I also wrote a book called The And Asset, which helps entrepreneurs and investors put a lot of money in a special type of overfunded life insurance. And so I actually save over $100,000 a year into that strategy. And it's liquid. There's a lot of liquidity there, but it's continuing to grow tax-free for the rest of my life. And so I have some of that. And then I just have some other short-term savings into a checking account. So that's where my liquidity is at. And then I also have a fund where I invest in other businesses. And right now we're a lot in cash, mainly because there's a lot of uncertainty and we're just looking for opportunities. And so that's kind of how my liquidity is based at the date of this recording.
Interesting. So you don't have any money invested in real estate or in equity markets?
I personally do not, mainly because I'm a big believer in businesses. I try to buy businesses and scale them. And so for me, and I know I'm odd here, but for me, business is my greatest asset. And so I don't want to put my money or diversify in other things like real estate or the stock market, mainly because of the result that I want to get. So I know I'm unique in that. And a lot of people that we serve, real estate is very, very popular. And I'm seeing a lot of people get results there. And then obviously a lot of people are putting their money in the S&P.
Yeah, totally. So let's rewind here a little bit and maybe go back to the 18-year-old Caleb and how Caleb got started on his journey.
Right. Well, we'll go back to the 15-year-old Caleb, where I got my first job at a chicken farm. Okay. And so I promise you, hopefully this won't offend too many people, but I have an appreciation for the chicken sandwich more than majority of the people listening to this. Let's just put it that way. So I process chickens, and I got paid $1 per chicken that I got to process. So what ended up happening is I started making money, and I have always been into being frugal and saving my money. And I've always been interested to see how money works. So what ended up happening was I started reading books, and The Richest Man in Babylon was one of the books I read. Good to Great by Jim Collins, books by Robert Kiyosaki. And I just started realizing that money could be an incredible tool to help people live a more impactful life. And while I couldn't articulate it at the time, I couldn't understand why everyone was broke. That just bothered me. And I was very into this stuff. And so ironically, at 15 years old, that's when I started investing in stocks. I started doing option trading. I never did real estate, but I learned a ton about real estate. And I was just super interested to see how this whole money game worked. And if you would have asked me at 15, 16 years old, I would have told you I wanted to be a hedge fund manager and trade options and just because I just love that whole game. And then I also knew that I wanted to learn about this whole money investing deal. And so I got a job at a bank at 17 years old. I grew up in central Wisconsin, and I just loved learning. I figured if I want to learn about money, I should probably work in a banking institution where that's what they do. And so I ended up learning in multi marketing. I worked behind the teller line. And when I was 18 years old, I got a job in our investment department as the investment assistant. Now, I thought I arrived because I had my name on a business cards. I finally had business cards, and I got to go to networking events and just continue to be able to share the message. And so I learned a ton. And then when I was 19 years old, the guy that was running our investment department took another job. And at 19 years old, when I was starting college, I was going for business and finance. I ended up taking over the bank's full investment department. And that's where, in total frankness, that's where I was in over my head, number one. But I also became really motivated to truly seek to understand and try to find ways to help our clients because I didn't know I didn't know much. Let's just put it that way. But I knew enough to be dangerous. And I also knew what happened locally would happen on a national level. And so what I did is I just traveled the country. I really, truly sought to understand people. And so I tried to reach out to experts and other people. And I really gained a lot about how taxes work, how trusts work, how different ways to save your money, how different efficiency strategies work. That's when I was super anti-life insurance. And now I wrote a book on life insurance called The And Asset. So I've kind of learned a lot of different things about money. And then when I was 21 years old, I knew I had this mission of helping people reach their highest potential in their life. And money had a lot to do with that. And I knew at my time at the bank, I could do that, but I was, I had to stick to my office, and I wanted to do more online and market to more people and really build a team. And so I actually left the bank on good terms, but started Better Wealth when I was 21 years old. And that's what I've been growing ever since. And authored the book, The And Asset, and have the podcast, and just kind of growing this message of different principles of wealth and trying to help people really master that. So that's my journey in a nutshell.
That's awesome. So at what point did you know or decide that you were not going to take a maybe more traditional route and go to college after high school?
Well, and I did actually go to college. I graduated in 3 years, and I was really blessed because the college that I went to, the University of Stevens Point, was in the same hometown. So I got to work full time, and I graduated, and I was homeschooled in high school. And so I was already kind of an out of the box thinker, and got a year of college done in high school. I got to live I'm super frugal. I lived at home, ate my mom's food, went to college, also worked practically full time. And what ended up happening is I'm not the biggest college fan, if I'm being honest, but it gave me 3 years to kind of do my own self-education. And so when I graduated at 21, that's when I left the bank. And I definitely leaned a lot more on my experience of mentors than I did school. School just gave me the freedom to say, you know what, I don't need to make money at 18, 19, 20. Like I don't need that to be the sole focus. So I reinvested that into myself.
Well, good for you. So how much were you making then when you were working at the bank, if you're comfortable sharing, and also going to school?
So when I entered college, 18 years old, I had $24,000 in my bank account, mainly because I don't spend any money. Okay. And that was invested in stocks. It would actually be fun if we went back. It was all individual stocks because I wanted to learn and all that stuff. And then when I graduated college, I was making pretty good money because obviously running the bank's investment department, I wasn't successful at all, but like being so young by default, I just was making probably $30,000, $40,000, $50,000 a year. And I just reinvested that back into my business because I always knew I wanted to do what I'm doing now. And that's when I first realized that taxes is a really bummer. I was like, man, I'm paying a lot of taxes because I didn't have like any write-offs and I was single. So yeah, that was in a nutshell. When I left the bank at 21, I had about $35,000. I actually liquidated my stocks to start Better Wealth, and we've grown it ever since. And so I would very much say I'm not endorsing liquidating your stocks. I was just super clear what I wanted. And so I saw myself and my business as the investment, and I was clear on the results because I'm motivated more than just money. I want to have an impact on this world. And I realized that business for me was a platform. And so I wanted to go all in on that.
So what's Better Wealth? Tell us what you guys do.
Better Wealth in a nutshell is a pretty much an alternative to financial planning. If you go to betterwealth.com, you'll see our website, and we help people. We're in like 42 states. We have the ability to work with anyone across the country. And essentially we serve people by helping them figure out their whole money thing, make sure that their money's working for them, so that they can live a more powerful life today and in the future. And so I would say in a nutshell, we're financial planners that take a unique approach and work with people online.
So talk to us about that. How does it differ, right? Because I think financial planners in some sense or in a lot of people's mind have a bad rap.
Yeah.
So what do you do differently? Are you managing investments? Are you working with them to understand how to manage it themselves?
Yeah. I'll just walk you through our 4 principles if I may, because I think this will make a lot of sense. The 4 principles that we walk through everyone, and you could be broke or you could have a lot of money. But the 4 ways that we walk through is, number 1, we have to have clarity. Most people have no clue what they want. And I'll take you back to the Alice in Wonderland quote of, you don't know where you want to go, any road will get you there. So many people have no clue where they want. And so we talk about ROR instead of rate of return, which the reason why financial planners or Wall Street has a bad rap sometimes is they're so focused on rate of return and they feel like whatever that rate of return is, that's where you're going to put your time and attention. And what we want our clients to really get clear on is, what do you want your life to look like? What do you want your life to look like now? What results do you want in the future? And get ultra clear on putting your money in a place and using your time in ability to live that reality. So the first principle is clarity. And we really try to park there and get really clear on someone's why. We want, in other words, to define what you define as financial success. The second thing that a lot of financial planners do not focus on, that we have a big focus on, is efficiency. Efficiency, we want to optimize your cash flow. We want to optimize your assets, and we want to optimize your debt. And I'll just walk you through how we do this. We would look at someone's cash flow, and people have money coming in, and it's either consumed, whether it's to taxes, whether it's spending, whether it's on regardless of what they're spending their money on. When you lose $1, it's gone forever, or it's saved for the future. So we want to ask the question, what are ways that we can increase our cash flow? Maybe redirect money into certain areas, maybe stop spending, maybe track your money here and start getting people to save more money, because we have a savings crisis on our hands as a country and as a world. So that's one thing that we look at. Then we look at your assets, and this could be your house, this could be retirement accounts, this could be anything really of value. And we ask the question, do these assets best align, best help you with the results that you want? What we find is a lot of people are investing, a lot of people have assets, but they can't really articulate what that asset is doing for them. It's just a number on a piece of paper. And then a lot of people that are listening to this are probably struggling with debt. Maybe not your audience, but there's a lot of people that we experience that have debt. And there are debt strategies that we focus with someone. And if you're in tough debt, instead of investing, let's take that money and invest in paying off your debt first before we move forward. And so the second principle that we live by is efficiency. And so clarity and efficiency, I think, what separates us. The third principle is all about consistency. And we want people to be consistent long-term and short-term. And so when I think of consistency, I think of C squared. So the first C stands for compounding. You want to understand that every dollar that you have is worth way more than a dollar. So compound interest is an amazing thing, but also control is incredible. And I think most financial planners, they wouldn't articulate it this way, but they're pretty much telling you, you give me your money, you'll get compound growth, but in a way you're giving up control. And so one of the things that we try to teach our clients is compound growth is really important, but also controlling capital could be a far greater value to you, especially if you identify more as an entrepreneur or want to invest in certain deals. And then the fourth principle is all about use. If you are your greatest asset, the way that you spend your time, the way that you spend your money, the way that you use your creativity and value is everything. So we try to help people use their time and money in what we call asset-based activities. And this is the number one activity, whether it's investing or whether it's the way that you spend your time, in a way that will help drive the bottom line, which may be financial or may be helping you get closer to your results. And so I know that's big, and I know that's different, and that does sound a little bit outside the box, but we're really all about clarity, efficiency, being consistent, and using your money in ways that will help you today and in the future.
Yeah, that's a good answer. The clarity thing's interesting because we've had a couple millionaires on the show that were in significant amounts of debt before they were able to climb out of it and eventually reach millionaire, multimillionaire status. And that's one of the things we've heard is, look, I didn't know where to start.
Yep.
Right. I was in all this debt and I didn't know it wasn't normal.
Mm-hmm.
Right. I mean, I guess it is, but I didn't know how to get out of it.
Yeah.
Right. And then it's like a specific moment, or they read something, or they hear something, or they talk to somebody, and they finally get this moment that says to live like this.
Yeah.
Right. But finding that, I mean, those of us that have somewhat figured it out, right, we think it's easy, but I think there's a lot of people that just don't know that that's not an option.
100%. I love that you mentioned that, and I totally echo. I think some of our most raving fans started seeing what was possible and started knocking off some of that debt and changed the momentum against them and turn that momentum behind them. And it's really cool to see some of the stories that are coming out of people that get their debt figured out.
Yeah. Good for you guys. So now for you personally, as the business continues to grow and I assume make some money, how do you decide how much to put back into the business and how much to invest on the side or take out personally?
Yeah. Are you guys fans of like profit first mentality?
Mike Michalowicz?
Yes.
Yeah. I'm very familiar.
So I really, really like that because I find that a lot of entrepreneurs, they're in love with their idea of a business, and you look back and they spend their entire life on a treadmill and they don't find any, like they don't have mechanisms to best save their money. And that's exactly why I wrote the book, The And Asset, because I just find that a lot of people have savings problems. And we actually have a tool on our website that shows people if they're financially imbalanced or not based on how much money you're saving at a certain point in your life. And it takes into consideration how much you're saving and how much you're consuming. It's a really interesting tool. And what we find is 98% of people are not saving enough money. So to answer your question, I find strategies on just how to save a ton of money, but I do it in such a way where I don't give up control. So that's why I have so much money liquid. Is we think of liquidity as like 0% interest, but I'm saving a lot of money where it's going to benefit me long term. But I also am a control freak when it comes to my money, and whether it's my business or other investments and businesses that I'm investing in, I want to have control over capital. And so I just find that if you can control money, you can save a lot more. And so I'm probably unique when it comes to that because there's probably other people that have they put their money in special investments and they can tell you exactly what goes through. I can tell you I save more than $200,000 a year into places that I can control that will grow for me long term, but that will give me the ability to reinvest in other opportunities.
Nice. That's good to know. So when you're working with all these people, what do you find as maybe the top couple things that are holding people back? Is it what we mentioned earlier, or them not knowing what to do? Is it being unwilling to act? Is it mindset? What is it?
It's mindset, and there's two types of people, right? A lot of people don't actually believe this life is possible. They don't believe that this result is possible. And so you see that in the way that they show up, in the way that they think about themselves, and it's just kind of like they just are consistently working against them. I think of think of like driving, trying to do the right thing, but your foot's on the brake. And it's just like, man, we got to like take a step back. And my recommendation to them right now would be like, through self-awareness, through clarity, start like looking at some of the people that are in your life, start looking at some of the things that are just working against you, and have tough conversations. Like, be self-aware, because it's really hard to be consistent over a long time if you're not self-aware. And so that's one type of people. And I just want to encourage them and just be like, this is possible, and be consistent in the little things. Then there's the other type of people that are like very like into what they're doing, and they also need self-awareness, but they're just like all in on their business, or they're all in on the next deal. And what I find is, because they're all in, they have the fear of missing out. It's just that drives them, and I'm sure we've all seen this. We probably all have funny stories of like, through that we make some really dumb financial decisions, or we're too romantic with our business, and it's not working, but we think it's going to work because we keep on telling us that's going to work. And so it's like, and again, I would make the argument that both of those people don't have clarity on the actual results that they want. They're chasing things, but they need to take a step back and have self-awareness. And I would say that self-awareness has a lot to do with how you start. And then all you want to do is reverse engineer what you need to do with your time and money to get to where you want to go. And that, for me, saying that might sound, we can break that down, and I would love to do that. But it really is that simple, but it needs to start with you knowing thyself. Because if you don't, then you'll just listen to the next person, and you won't really know why you're applying that to your life.
Yeah. So how do you figure it out?
I love your questions, you guys. right to the point. I love it. So I would be able to answer, what would you do if money wasn't an issue, and how do you define financial success, and like get really clear on what that looks like. And what we find is, don't give some number, because numbers can be deceiving. Be like, if money wasn't an issue at all, this is how I would be spending my life. And then look at what you have going on right now. Look at the money coming in. And there's a lot of people that need to make more money. So there's side gigs, or you might need to find another job. You may want to start a business, or you might want to shut down a business and go work for somebody, because cash flow is everything. Cash flow will really run a lot of areas. And the number one investment, again, is yourself. If you have clarity on where you want to go, look at your cash flow and ask the question, is it possible? Is it possible that we could increase that? Because that is the number one thing that will drive the bottom line, is if you can maintain your standard of living and increase the money coming in and save that. The next thing that I would do is look at your assets that you have and ask the question, are these assets going to best get me to where I want to be? And when I'm there, are they going to be, can I spend them and use them in the proper way? And those are the two ways that I would look at that. So I'll just use an example. There's a lot of business owners that are maxing out their 401k, which is totally fine. Some people are doing SEP IRAs, totally fine. The problem is, if they come to me and say, man, I need more money, I want to invest in a marketing strategy, and I want to do this, or I want to do this opportunity, but I have no money. I would look and say, dude, you have $300,000 in this account. The problem is that account is not super available and is disincentivizing you to access that money. So that's an asset, but potentially that asset is not showing up in the best way for an entrepreneur. Now, the same is true that you could put your money into a liquid strategy, but you're just spending it. You'd be much better off putting that asset into something that was more locked away, that was going for the future. It's not that a 401k is bad or good. It's being self-aware on how you're going to use that asset. Does that make sense?
Yeah, I follow you. Yeah, I mean, you talk about self-aware and you talk about consistency. I think we've talked about it a couple times on this show, but I'm reading the book, or I'm just finishing the book called Slight Edge. You've probably heard of that.
Yep.
And that's what he's all about, right? Doing the little things. It's consistency, that 10% or 5% of the people actually show up and do it over and over and over again. But that's hard to do, right? Yep. I think all three of us would admit that. That's hard to do.
Yep.
Carrying it through weekends, carrying it through, it's tough, right? Being consistent over and over again, you get burnt out.
Yep. Can I give an example off of consistency?
Yeah, of course.
So valuable. So if you get a car and you look at gas mileage between city and highway, what you'll find is highway gas mileage is far more efficient than through the city. And it makes sense, right? Because when you're through the city, you're not driving as fast, but you're stopping and starting. Whereas the highway, it takes a little bit of energy to get up to speed, but then you get to when you're cruising, it gets easier and easier, and it's more gas efficient. I think the same thing goes with our money and our habits. when a lot of people that I see with their money is they're stopping and starting, and they're never getting what Albert Einstein is noted for saying, the eighth wonder. They're just never getting that moving, and they're making different decisions. And so we're missing out on that consistency. The same thing goes with our habits. And quite frankly, you guys, this is something that it's a daily battle for me. I want to be consistent in the morning, but I'm not always. And I know that if I can be consistent in the little things, that will compound in every other area of my life. And so I just want to just transparently say that is the number one thing that I'm working on personally. And I know that if I can be consistent at any positive thing for a year, that massive change will happen. But it doesn't happen overnight. It happens over multiple days. And so I just want to echo what you're saying.
Yeah, that's a good answer. Thanks for sharing. So, I mean, Caleb, talking back about you now, are there a couple things that you could point to and say, hey, that's really helped drive my success, whether it's financially or being able to start this business or, whatever from a young age? Are there a couple things? Was it being hardworking? Was it looking for opportunity? Was it being willing rather to take a chance and to start a company? Are there a few things that you can point to that you can say, hey, that's why I've been as successful as I am?
Right. 100%. So a couple books, and I'll give you, so when I was working at the chicken farm, The Richest Man in Babylon was the first book I read. And I read that multiple times, and I'm dyslexic, by the way. So reading is really a labor of love, but like I was so fascinated by some of the principles in that. And then I read a book called Good to Great by Jim Collins, and that talks all about level 5 leadership and getting the right people on the bus. And so at 15, 16 years old, I started falling in love with this whole money thing, but I also fell in love with this, like, how do I surround myself with people that will really help me? And I'm a big fan of the quote, solutions that you find to your weaknesses become your greatest strength. Okay. So I'm super short. I'm no longer, I'm about average size now, but I was growing up was super short, and I've always struggled with reading. Like, I would much rather wing a speech than if you give me something to read in front of people. Okay. And so I found ways throughout my life to get around the fact of like reading is really hard for me, but in class, I would go and network and find usually the girls in the front row that take good notes, like they always ended up in my group projects because I'm like, I just know that they like that's super valuable. I want to learn from them. And so I use my abilities to like win friends. And so the other books that have like made a tremendous impact, and we actually read them as a company, is How to Win Friends and Influence People. People and relationships are like the thing for me. I've invested more time and money into relationships than anything else. And then 7 Habits of Highly Effective People. I got mentored at a young age by a guy who's probably worth 600 million plus. He sold his last insurance company to Warren Buffett, and just an incredible guy. And I got him to mentor me. And he said, before I'm going to mentor you, I want you to read 7 Habits of Highly Effective People. And so through mentorship in that book, I realized the importance of being proactive, through thinking with the end in mind, through sharpening the saw. So I just started gaining all this stuff. And so to answer your question, I would say relationships and mentorship relationships have been a common theme in my life. And then also this common idea of like, I want to serve and I want a heart of service, and that consistently, or it being consistent with being able to serve and add value to people, you'll end up winning. And so I will summarize all that by saying, Think and Grow Rich. While I can't endorse everything in that book, a lot of concepts of that it has been really true, especially with this concept of money following value and creating value in the world. And I just always knew when I started reading these books, if I could create value in the world, people would pay for that, whether it's now or in the future. But it's making sure that you can quantify that value. And so that's been my journey of like learning from people, reading different books, is just how to learn from others and really try to translate my actions into value. Now, I'll also say, if you're not an entrepreneur, this same principle shows up in the people that you work with and the investments that you make. Where can I put my money and time to create value? And the more valuable and you put your money, it's going to make a greater rate of return. Or the more valuable you are to an employer, you're most likely going to get a raise if they're good. And if they're not, the marketplace is a beautiful thing.
No, I appreciate you sharing that. And you bring up, some interesting topics that we've discussed about mentorship and networking groups and whatnot. How have those played a role in your success, and how have you been able to create relationships with certain people that have played, that role of mentor in your life?
It all started, and this is oh man, this is a good question. I got a job at the bank at 17 years old through a guy. His name was Dick Judy. He actually passed away 2 years ago. And I was so nervous, you guys. 17-year-old Caleb left his car on because I just forgot. Like, I was that nervous. My mom helped me write down questions so I've come a long ways. Okay. And that one conversation, he picked up his phone, got me a job at a bank, and my life has been changed ever since. And so I knew from there, I'm like, man, there's this thing, these relationships, there's a phrase that says your network is your net worth. And I truly believe that. And so I was just always intentional to find people that were way more successful than me. I could then use my age card. So if you're young, use it, use the student, like you're young, like people want to give back. I want to serve people. And then you don't have to be young. It just helps if you're young and look like you're 12, like I did. And so that's like one area. And then I've always been intentional with like seeking to serve even the people that are in my life. When we talk about investments, like here's how I think. I spend quite a bit of money a month sending things to people. I have something called the Denver Dinner Connect, where I pay for dinner for 10 to 15 people who it's an invite only. And I just have them come and we connect, and it's no pitches. Just like I want to get to know their story, their business, and try to connect them. And I've just found that has just been a really positive thing, because the more people I get to know, like you guys, I've just not seen that backfire. And so I'm a big relationship person, and that's been definitely a common theme starting from when I was so nervous that I literally have come a long ways as it relates to being introverted, being not confident, being so scared I left my car on, to, now hosting dinner parties and paying for people's meals, mainly because I just really value who they are and their story.
Yeah, totally. I want to ask you just a little bit about your childhood and what it was like growing up in Caleb's world.
Yeah. So my parents are incredible. My dad has a PhD in molecular biology, and my mom was a nurse, and she stayed home and homeschooled us. I'm the oldest of 6 kids. So I will be the first to say I had an incredible upbringing. And while my parents were not entrepreneurs, they loved on us. They taught us values. I grew up in a Christian home and maintain those values to this day. And so I was really grateful for that. And also, like, this will tell you a lot about my mom. When I was 12 years old, I was in like the skit, and I was, again, scared to speak in front of people. And I forgot my 2 lines that I had to remember. And what made matters worse is I pulled out my note card and like fumbled over my 2 lines. And I just remember being super just embarrassed and frustrated. I was already short for my age, and I can't even read practically. And my mom has always just been encouraging, but also like reality. And so she's like, Caleb, you can't do anything about your height. So just learn to laugh about it. Don't be a victim. Like we'd get punished as kids if we like pouted. My parents did not want to raise any victim mentality in us. So I'm grateful for that. But she then said, the things that you can control, like your reading, like how you show up, like how you learn, you have a moral obligation to go all in. So I had like a loving family, but they did not let us get a pass. They were hard on us. And like my dad, if I worked with him, it was not good enough just to stand around. I had to be proactive or he would get upset with me. And another story that I can share with my dad is I remember doing like college classes in high school, and I got an A in my macroeconomics class, and I'm like on cloud 9, you guys. I come back, I tell my dad, and he's like, did you learn anything? And I said, Dad, of course I got an A. He's like, Caleb, there's a lot of people that get A's in classes that don't learn anything. And I 100% echo that, because as I've gone through life, I realized that a lot of people don't have a heart of learning. And that's one thing that I really gained a lot from my family. And so I will say that if you guys want a true champion, you should get my mom on here. and
let's bring her on.
Yeah, I would love that. So I'm super grateful for that upbringing. And again, not entrepreneurs, they're super frugal. So it's not like I learned to even invest through them, but I got a solid foundation. And in the end, they were a support of me going out and doing this. And so I'm grateful for that.
Yeah, that's awesome. So Caleb, we've discussed a little bit of the past and where you are now. where is Caleb headed? I know you shared a couple things with us before the show in terms of growing your business and your audience. What's the future hold for Caleb?
Yeah. Thank you so much for asking. It's interesting because Amazon is getting into the financial service business. They're starting in India, but mark my words, they will be in the US. I'm not going to put a time frame, but like it's only a matter of time. So I find that the financial service business is super archaic, not serving people well, and not set up to scale. Because when you get into the financial service business, it's essentially like get a list of 100 people that you know, buy coffee for them, and then try to get them to give referrals, and it's like they don't really want you learning a ton, because the more you learn, you're not selling. So that's like when I got into this business, that was kind of how it was positioned. And I'm like, there is no way in the world I'm going to do that. It's just, I was living at home and I didn't have to sell. And so I'm grateful for that. And so I always wanted to do something different, but I've always been passionate about helping people with money. And so, Better Wealth, we have like something provocative on our website. We're a better alternative to financial planning. And what I mean by that is number one, we do everything online, which in the financial service business, the average financial advisor is a lot older than me. Let's just put it that way. But I think last I checked, it's like 57 years old. Okay. And so there's a lot of people that are not using technology at all. And so when I started Better Wealth, people thought I was absolutely crazy. They're like, Caleb, no one's going to do business with you because you look like you're like 15 years old. No one's going to trust you on the internet. And like Zoom, like that's bizarre. Like no one's going to, like everyone knows what Zoom is now, but no one knew what Zoom was 3 or 4 years ago. And so it was just super interesting. So I knew that the internet was going to be a place where people could learn. And I knew that people didn't necessarily want to be sold or convinced. They wanted to seek to understand and then find someone that could really be an expert. The other thing is we are taught in the financial service business, take a bunch of tests, become a fiduciary, but the fiduciary test is just a test. Like it's just a test that you take. And I've always had a problem with people in the financial service business, like on one hand, needing to go get clients, and another hand, being sort of incentivized on, what they did with clients. And so what we do is our team is fully salaried, even wealth coaches. And we've positioned it to be where we attract the business to come in. And then you're connected with a wealth coach online that takes a coaching approach through principles. And then that it's just very much changed the game as it relates to like how that relationship works. And then we're really, really big on optimizing your cash flow and talking about financial balance instead of a financial product. We're like, if you're financially not balanced in life, if you're not saving enough money, if you don't even understand what that means, then we got to take a step back and make sure that we know where we're trying to head before we try to make a product decision. And I just see a lot of products being flung around. And remember, going back to that starting and stopping, unfortunately, a lot of people in the way that they use their money and handle their money, they're starting and stopping a lot. And so my book is also on a unique strategy that a lot of people use, and we incorporate that into some of the people that we serve. And so that makes us unique. And where I want to head is I want to dominate the financial industry, and I want to serve 1 million people in the next 5 years. And we're going to do that in how we're starting to acquire different financial planning offices, and how we're getting coaches to come on board, and how we're starting to acquire channels of distribution. And so we're starting a media company, the Better Wealth Network, with multiple podcasts and other blogs and things. And so we're building up a media company along with a independent financial coach company as well. And so that's our approach. And I'm just going to hopefully be around in 5 to 6 years when Amazon gets in. So that's my goal.
There's not a whole lot they're not getting into, right?
Yeah.
Well, congrats on your success, obviously, and we wish you the best in growing it. So just in closing here, I'm going to ask you a few rapid fire questions and then any final words of advice. So these are what we typically ask our millionaires. So what's the most expensive car you've ever purchased?
Oh, this is going to make me look bad. I do own a Tesla, so I paid $65,000 for that.
Okay, what model?
A Model 3. Model 3
Okay.
not performance, all-wheel drive.
Okay, nice. What about most expensive meal out that you've personally paid for? It might be one of those ones where you're taking people out, right?
Yeah, $580, and I'm still salty about that.
Okay. What item or experiences are worth spending more money on to you?
relationships, and if most people, when they get clarity on what they want, it's more time with the people that they love. Don't cheap out on that.
Yeah. What's not worth the money?
Trying to impress people that you don't like. And that's, by the way, that's a lot of stuff as it relates to cars. Like a lot goes into that category.
Right. Okay. Age when you think you became a millionaire?
So 21 years old. Well, and that's still up in the air, but that's when my business was worth more than $1 million.
Okay. How much do you spend a year, annual household spending?
Personally? Or is that a personal?
Yeah, correct. Personal.
I don't spend a lot of money, so maybe $24,000, but I would say less than $24,000.
Okay. As much as you're comfortable sharing here, what's been your range of household income?
I started when I was 21. When we started Better Wealth, we made $80,000 the first year, and last year our revenue is above 7 figures, and we're on track to 5x that this year.
Good for you guys. I mean, that's pretty good, right? You start the company, make $80,000 the first year. That's
I got into a good industry, I think.
Yeah. What does it mean to be happy or fulfilled to you?
Living a life of service and of impact, and that's what that means.
Okay. So anything we didn't touch on, Caleb? Is there any mistakes that you made that you'd advise against, or anything you wish you would have done better? Any final advice?
I still to this day care a lot about what people think about me. And one of the things that I admire about a lot of people that I look up to is they have a true love for people, but they're not afraid of what other people think of them. And that is true wealth, you guys. And so one of the things that I would tell myself starting over again is like, Caleb, like, be patient with yourself and don't care about what other people think about you on the good side and bad, because I've just found that has changed the way that I feel. And that means I'm ultimately vulnerable to what other people are saying. And so that'd be one thing. And then really understand what it means to be your greatest asset. I just find that so many people are devaluing themselves in the way that they think about their time and money. And if you actually understand that you should be the number one asset on that balance sheet, which, by the way, if you look at a balance sheet, your name's not even going to show up. If you understand that and you actually have that belief, then redesign your life, your time, and the way that you use your money in a way that will best enhance that. Because ultimately you have one life, and it's like my deepest desperation to see people live that well.
Yeah, it's a good answer. So thank you. Thanks for coming on. Thanks for sharing. Your company, do you own 100% of it, or do you have equity partners?
I do own 100% of the company, which that was important. That was important to me early on, and that was advice I was given by multiple people when I first started. They said, and this is for me personally, and you guys can cut this out if you want, but they said for the first 5 years, because they knew kind of my goals, for the first 5 years, don't partner with anyone, because majority of partnerships will end poorly, especially if you don't have clarity on where you're at. So I'm now at a place where I would be open to that. And we're just financially strong enough where that doesn't need to be the case. And we're looking into how to create more of an employee-owned profit share system, because I'm a big fan of everyone having ownership in the upside.
Yeah, nice. Good for you. Just curious. So awesome, Caleb. Thanks for coming on. Appreciate you taking the time. Net worth of 7-8 million, something around there, right? With the business and everything you have liquid. So thanks again for coming on. Really appreciate it.
Thank you, guys.
Thanks, Caleb.
Thanks for listening to the Millionaires Unveiled podcast with Clark Sheffield and Jace Mattinson. For more stories, investment opportunities, and information, check out our website at millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.